ABC, the CEO, wanna change your life? Come see me, yo. I'ma teach you how to build up wealth for your family, not just for yourself. I'm a bestseller, a house flipper, a businesswoman, a go-getter, a big investor, a gold builder that can teach you to get richer like millions, baby. You really about to fill your savings. You about to have multiple streams to pass to your children, baby. Let me teach you to get your credit on track in the long run. You'll make it all back at Catalyst and watch it all psychological black-owned firm, but we ain't all black.
Hey, what's up, everybody? It is your girl, Constance Carter, and I'm live today, and I'm so excited. It is Friday, and I am so excited about being here today and talking to you about something that I think is really important. The reason why I wanted to talk to you about this today is because so many people have came to me and they want to do something. They're out of money and a lot's been going on. So I want to just talk to you about some financial decisions. I'm always about making the best financial decisions for you. I'm always about putting people in better positions that they are in. And typically, interest rates have really done a number. Y'all know I've been in real estate for over 22 years. Wait a minute. Hold on. Let me back up. I want to make sure that you are following all of our pages. I'm live right now on about 8 or 9 pages. Whatever page you're watching me from, make sure that you subscribe. Number one, to the Fly Nubian Queen. I'm on the Fly Nubian Queen on YouTube and on Instagram. Also, make sure where can you find me? Everywhere at I Am Constance Carter. Okay, come in, make yourself comfortable. I love to talk to you. I love for you to talk back to me and talk black to me. I love for you to talk back to me. Oh, excuse me. This information is for everybody. Oh, that went down the wrong pipe, even though I kind of did get a little cold last night. But I do want to talk to you about some financial stuff, because I think it's important with the interest rates going down to where they are. It's fascinating, and I'm watching people. A lot of people are calling me for refinances. A lot of people are calling me for home equity line of credit. A lot of people are now in the game to purchase property because they've been waiting on interest rates to drop. So what we've seen is interest rates have been dropping over the last couple of months. Since August, we've been seeing interest rates really, really drop, which is great. We all been waiting on it, right? I do want to tell you this. If you are waiting on a COVID pandemic refinance or interest rates, you can probably forget it. You're probably not going to look at a 2 or 3% interest rate anytime soon, but we could be hopeful, because here's the thing. The longer we wait, what we have seen is, even though rates are higher, prices have still been going up. The market is still hot in a lot of places. And so nothing is stopping and nothing is waiting on you or the right time for you to get in the game so that you can become a homeowner. But I do want to just kind of tell you some reasons why I believe it might be a good idea to refinance, even if the interest rates are higher than they were when you purchased your property or your current interest rate, which is extremely important, because, again, I always want to put people in a better position than where they are now. I would never advise you to refinance or do anything if it's worse, right? So just because you have a higher interest rate, it doesn't mean that it'll put you in a worse position. So I'm gonna just give you a few reasons why it's potentially good for you to refinance. Number one, you get access to your home equity. Okay, so you might need to do some home improvements. You may have college tuition. A lot of us are getting our property so that we can pay for college tuitions, because those student loans is something else. So you may want to refinance and pull a little cash out to tap into your home equity for tuition. Maybe you are looking to start a business. If you are looking to start a business, guess what? Especially if you are a woman and a Black woman, I'm helping people start businesses. I'm helping Black women from all over the country with my Net 7 collective. But there's some type of investment that you may need when you're starting your business. So you may need to tap into your home equity in order to do that. And that's okay. Because if you're doing it for another reason, if you're doing it to invest in yourself, that's a good reason. Okay. The other thing is, you may want to shorten your term. So maybe you have 30 years, maybe you want to go to a 10-year, and it'll help you pay off your mortgage sooner. That's a good idea. Even if the interest rate is high or higher, shortening your term will help you then pay off your mortgage a lot sooner. That's a good thing. Okay. Another thing is, if you purchase your property and you purchased it with maybe 5% down, 10% down, and you have what's called PMI, or private mortgage insurance, Yes, you should consider refinancing your property to take the PMI off, because even if the interest rate is higher, you may still save on your outgoing mortgage payment because you no longer have PMI. What is PMI? PMI is private mortgage insurance that's put on your home if you purchase the home with less than 20% down. So if you're purchasing your home, you put 5% down or 10% down, or if you've got an FHA loan and you want to get out of that PMI, that could be costing you an extra $500-$600 a month in PMI. Well, a higher interest rate, taking out that PMI, the outgoing expenses are going to be less. So it might be a good idea for you to refinance to get rid of that PMI. Okay. Another reason is you might just want to change your loan type. Remember, I just mentioned that you may have an FHA loan. Okay, so here's a strategy, y'all. Okay, here is a strategy that I use in order to help my clients get multiple properties. This is very muy importante. Okay, so when I help my clients, and if you look at my TED Talk, Google that shit. I talk about how I've helped my clients increase their portfolio in purchasing multiple properties. They do that with getting an FHA loan. A lot of times they'll get an FHA loan, so they'll purchase a property 3.5% down, get an FHA loan, get a multi-unit property. Refinance, take the cash out of that property, get another property. You can get another multi-unit property. You got to live in the property for a year, okay? But you could take sacrifice, right? Because we're talking about investing. Investing is a long-term game. It is not a short-term. So you may want to get another FHA loan, pull the equity out, refinance there, and rinse and repeat. So refinancing is actually a really good idea when it comes to you possibly getting another loan opportunity. So that's another reason. Okay. So that is a great reason. And look I see all these people on Instagram, Facebook, YouTube. Chime in and let me know that you hear me, that you know what I'm talking about. I just want to just drop some game on you real quick. And thank you, Portia. Thank you for commenting. So everybody that's commenting, thank you, We Wealth Woman, over there on Instagram. But I just want to just give you some game real quick. I'm not going to be on here really long, but I wanted to give you some game because I think it's a lot of people think that because rates are maybe not be as low as when you purchase your property, that it's not a good idea. And typically I don't like for people to get in higher situations or worse situations than what they are. But if you look at the overall picture, what's your goal? What is it that you're trying to do with this money? And if it's going to be something that helps you in some way, i.e., paying for tuition, i.e., starting a business, i.e., major expenses. Maybe you need to do some major repairs on your property, all of those things. Okay. So changing your loan type, your flexibility. This is a big one. Okay. So all of them are big ones, but think about this. Your interest rate right now, say, is 3%. Your mortgage payment is, $2,000. Okay. Now, the only reason now with all of this inflation that's been going on, we are basically living in a recession. But the only reason why we don't have the high default rates that we would in the normal recession, why? Is because people are living on their credit cards. That's the only reason why people are living on their credit cards, y'all. So you have all of these outgoing expenses because you live in check to check, using your credit cards to pay basic expenses. And now you're outgoing your expenses. Now you're struggling because now you robbing Peter to pay Paul. Yeah, your mortgage payment is $2,000, but maybe all of your credit cards are another $2,000. So say you took out $15,000 to pay off all your credit cards, $20,000, $50,000 to pay off your credit card, and it increases your mortgage payment by, say, $500. But you reduce your overall outcoming expenses by another $2,000. Does it make sense? So one of the things that I've helped my clients do, because a lot of people have come, what should I do? How can I reduce my outgoing expenses? Because right now I am really struggling because I'm paying out these credit cards. I'm paying everything with these credit cards, and I'm like, it's really tight. Well, even if the rate is higher, but your outgoing expenses is lower, that may be a good reason for you to refinance. So I just wanted to tell you that because people are so caught up with interest rate. And it's really about affordability. It's really about what can you afford. It's really about freeing yourself up from a lot of I remember the first home that I got, y'all. I was 23 years old. I had back then an 8.5% interest rate. I had student loans. I had bills up the yin yang. My credit had took a dive. And I had a bunch of bills and I was struggling. I refinanced my home temporarily to an 11.5% interest rate. You thought that 8.5% was bad, but I refinanced to an 11.5%. But I paid off all my bills and my outgoing. I saved $1,000 per month on my outgoing expenses. Do you feel me? So I did that for a year. I kept that 11.5% interest rate for a year. I was free. Now my mortgage payment was higher, but my debt was lower. And so it allowed me to move a little bit easier. So think about that when you're thinking about, is it a good idea to refinance my house? Well, maybe I don't. Maybe I just want to pay off some bills and I don't want to touch that interest rate. Well, you can get a home equity line of credit too. That's also an option. So there are definitely options, but here's the thing. I don't want you to take the money and go on vacations. Please, y'all. We got to be more disciplined than what we've been. I know social media is influencing us to live our best life, to live the soft life, to do all those great things that we want to do and not wait. But I just want to encourage you to, if you are going to do something like that, if you're going to pull some money back, use it and invest in something else, whether it's investing in paying off your bills, investing in some type of investment vehicle, maybe another property. It's a good idea. Invest in a business, invest in some education on yourself to improve yourself. Because I rather invest in myself than invest in anything else. Because I know that I'm my biggest commodity. I remember when I was a struggling entrepreneur, when I first opened my real estate office, you guys, I would have to decide on whether I was going to pay my mortgage or pay my lease. And my lease to my office. And I decided sometimes that my mortgage would have to wait and I would pay my lease so that I can make sure that the business is going to pay the lease eventually. So sometimes you just got to make those sacrifices. Yeah, it messed up my credit. Yeah, I was late, but I invested in my business. I invested in myself, and those things ended up paying in the long run. So sometimes you got to make sacrifices. I know we live in a microwave society. I know our attention span is that of a gnat, y'all. But you can have some things so that you can invest in yourself. So for the long run, you can have other things. So that's all I wanted to tell you. I did not want to be here before you long today, good people. I just wanted to put that in your mind, and just let you know that there are opportunities available for you if you are looking to get a loan. Guess what? I'm licensed in California and Maryland in terms of my mortgage company is licensed in Maryland and California. And then if you're interested in real estate, my daughter Kyle, she's my partner now. We're licensed in DC, Maryland, Virginia, and California. So we are here to help you with all of your real estate needs or loan. But I just wanted to tell you that because I really need you guys to take advantage. Take advantage. Francisco said, in this market with the interest rate where they are, do you recommend a higher down payment or invest somewhere else? A higher down payment or invest somewhere else? A higher down payment is definitely going to reduce your interest rate. I always recommend investing in real estate. Real estate, you can't go wrong with real estate. 80% of wealth in this country is generated through real estate. So real estate is always something I'm going to always recommend. But sometimes putting a higher down payment is not going to make a huge difference in your monthly payment. So say you have 5%, now I'm gonna put down 7%. That may make a difference of $30 or $40 on your mortgage payment. And you have to think about, is this really worth it for me to put this extra $10,000 down? And it's only gonna really help me by $30 or $50. So you have to really just think about what works best for you. Let me see. Any other questions before I get off of here? No? All right, y'all. But thank you for that question, Francisco. And thank you for all the people who are watching all over the place. And remember, text the word Queens to 87948 every time you want to get notified when I'm getting ready to go live. Now, Fly Nubian Money is getting ready to come on after me. I'm not going to be on there today, but them ladies always got something crazy to say. So thank you guys for listening. If you want to refinance or purchase, hit me up. You could just DM me, and I can be reached anywhere at I am Constance Carter. So anywhere, Facebook, Instagram, YouTube, you can reach me at I am Constance Carter. Thank you. Love you. Take care.